Manoj, hi. Morning. Good to have you on the show. In
Hi, good
the
morning.
quarter gone by, you've seen your AUMs cross about 5,000 crore rupees, milestone. It's been an all-time high disbursement this quarter. Which ticket size and segment would you say contributed to this kind of a performance from you?
We are in the affordable housing segment, and we operate in a narrow band of between 500,000 to about 2.5 million. That's 5 lakh to 25 lakh ticket size. Since the time the company was set up, we have stuck to that range, and our average ticket size is around 10 lakhs. And this is the affordable housing segment where people are mostly first-time home buyers. So that's the segment that is really doing well. And even prior to COVID, it was a very robust segment. And post-COVID, also the business and the demand has come back in a very big way in this segment.
So considering this big performance jump from you, the market is wondering what is the guidance then going forward? How is it that you're going to continue to beat your own performance in the quarters to come?
So we have, we just want to dig in our heels. We are a long-term player in this category. We feel the affordable housing business has got, potential for several decades as India moves from being a low middle to a middle income country. So we are in it for the long haul. So we are not looking at it from a quarter to quarter basis. It's a very, very, very large opportunity in which we currently have a very small share, and we are looking to kind of keep building on that share and keep building our brand in this segment.
Give us a sense of the loans which you've dispersed. How much is to salary and how much is to non-salaried?
Salaried self-employed ratio generally is 70-30. That's how we have been seeing it in our business. So 70% is to salaried customers, 30% is to self-employed customers. Generally, broadly in that range is where we have been.
See, Limited last week they've increased rates. It's a marginal uptick, but you know directionally where things are moving. So what happens in a rising interest rate environment? Because some could argue that in a rising interest rate environment, large players will get better access to debt market, they will get cheaper deposits. How would you navigate this kind of an uptick in interest rates to remain competitive?
So if you see our cost of borrowing, we have been very, fairly competitive. And so we have been kind of punching above our weight as far as the cost of borrowing is concerned. And we are confident we will continue to enjoy the confidence of our lenders and keep and our ability to keep borrowing as those rates is going to be there. But having said that, yes, there is a kind of gradual increase in rates. But the segment that we are present in, it's a genuine end user segment. So people who are building homes for their own use. So it's not that they are going to postpone their decision to later just because the rates have gone up slightly. Generally, what happens is people calibrate the requirements based on their repayment capability. So if the repayment capability is say 10,000 rupees a month, then they would borrow up to that point and construct probably one room less or use slightly cheaper materials in building the inside in their interiors and so on. So consumers generally calibrate their requirements depending upon how much they can afford. And the rate increase is going to be gradual. It's we are thinking that it's not going to be a very sharp increase. So I think it will be absorbed by the consumers in the medium term.
The home finance market or the home loan market has become brutally competitive, and now with SBI and other PSU banks coming out with very attractive offers, what would be the USP for, let's say, HomeFirst Finance? Because you have to remain profitable while other PSU banks may take the liberty of subsidizing the home finance business. The customer will get a better rate if you go to SBI and to other banks. How would you be differentiating yourself? Because your lending rates, I'm assuming, would be higher. If they are higher, then how will you compete?
That's right. So, see, our edge in the market has always been, basically knowing the customer a little better and being able to provide, a better solution to the customer. So there are millions of customers in India who are working in the informal segment. They cannot produce the kind of documentation that's required by the larger lenders, for availing a loan. And someone has to apply their mind and figure out what the real income of the customer is, where they are working, what is their stability of employment, etc. So a lot of customers working in the MSME and smaller companies and so on, and so that's really our expertise. So we are able to assess the income of the customer and provide the right size of loan for those customers. Plus, the other USP has always been using technology and using digital to provide a superior service to the customer. So a seamless experience, for a first-time home buyer is what we are providing. So, and that's what is attracting customers to us. And these USPs are not, I mean, they will continue to remain for a long time, because the larger lenders, as you're saying, and the competition that's becoming kind of brutal in this segment is largely focused on more formal customers, where it is easy to underwrite, easy to understand the customer, easy to understand the income. So that's the segment where the brutal competition is going. In our segment and the kind of value add that we are providing, there are fewer players who are able to offer that kind of value add.
Good morning. So, you do talk about first-time home buyers that will come on your platform. You try to say that the loans will be disbursed, sanctioned in 48 hours time, hassle-free. But this space is getting more competitive. You've seen the banks, look at fintech. You've seen the boom of fintech as well. Isn't that eating into the market share?
Competition, in some form or the other, competition is going to be there. There will be some fintechs to enter, etc. But then, at the end of the day, we have, we started the company 12 years ago. We have, we have built certain expertise in this segment. We know the customers better. We know the properties better. We know the markets better. So all of that helps us in, offering a faster product or a faster service to the customer, and a better experience for customers. So in this business, actually, experience keeps adding up, and you get a deeper understanding of the geography, deeper understanding of the customer segments and properties, and that keeps us ahead of the curve, as far as competition is concerned.
Your expertise is first-time home buyers, and so much is being said, right, that the comeback of the property market actually began in Bengaluru, where the IT salaries had started to go up. What are the trends that you're seeing? You do have a presence in a lot of the geographies when it comes to this trend. Is it pan-India? Are you seeing the ticket sizes also go up? And this, of course, before the cost of funds will go up, the interest rate hikes will go up.
Yeah, so trends that we're seeing, actually, it's India's multiple countries when it comes to properties. So if you see the trends in the Western geographies, most customers, I mean, these are more industrialized states. So customers have lesser time to invest in building a home. If you see Maharashtra or Gujarat, the trend is largely people buying ready-made properties, which are built by developers. So where they have to, I mean, only arrange the finance, and they can, maybe at the end of 12 or 18 or 24 months, they can walk into their homes. The trends in South are very different. So you have customers actually acquiring plots of land. They invest their time for about between 12 to 18 months to actually construct the house to the way they want it. It's a more of a self-construction and self-building market in the southern parts of the country. So those are the trends that we are seeing, and we are present in both segments. So in the West, we work with developers and offer loans to customers who buy properties. In the South, we are working directly with customers who are building their homes and constructing their own homes. So those are the broad trends that we see today. Also, there is, more and more customers are looking to purchase ready-made properties. They are not really looking to book a property which is at a very early stage, which used to be the trend earlier. So that's the other trend that we are seeing nowadays.
So the trends are that you're spotting. Home finance shares priced right now higher by over 4% in trade. Thank you so much for joining us live on today's edition of The Market.
Thank you so much.